Right, so Israel has always liked to sell itself as the startup nation, hasn't it? I've said this on a few videos now. The place where Silicon Valley meets the Bible, if you like, where you can invest with one hand while the other pretends not to see all the rubble and the destruction in Gaza. For decades, that trick has worked fine. Politics was dirty, but finance was clean, and Tel Aviv could count on the world's pension funds to bankroll its immunity. Well, not anymore. Following on from increasing divestment from Israel by the world's largest sovereign wealth fund in Norway, and a multi-billion Danish pension pot has now declared Israel unfit for investment too, citing war crimes and international law. That's not student protestors or stereotypical hairy activists. That is the guardians of global capital calling time on Israel's safe haven myth. When the grey men in suits of Scandinavia say you're a risky investment, you're in far deeper trouble than you might care to admit. Right, so Israel, amongst the many myths it has propagated around itself, has always wrapped itself in one in particular. Not the myth of military invincibility, secured by American weapons and European silence, as there are so many stories floating around about right now, but the myth of financial immunity. For decades, Tel Aviv's pitch to the global markets was simple. Whatever you think about politics, your money is safe here. Put your capital in our bonds, our banks, our tech startups, and let diplomats and activists shout themselves hoarse over Gaza and the like. The mainstream media won't bother us either, of course. The implication was that Israel's economy was insulated from politics, a fortress of innovation and stability where finance could continue humming away even as the bombs fell a few miles away. That myth in the last few months especially is now being torn apart. The first blows are not coming from radical street protests, but from the cautious, grey-suited boards of Northern European pension funds. Gripping stuff. The latest blow in that regard clobbered Netanyahu and co. just this week, though. Denmark's Akademiker pension, I dare say you could hazard a guess from that name as to who that represents, which manages roughly $25 billion worth on behalf of teachers and university professors, announced that it would withdraw from all Israeli state-owned and state-controlled assets. So this was not a boutique protest by a niche activist fund. This was mainstream. This was a fiduciary institution making a public declaration that Israel's war in Gaza and the continued expansion of settlements in the West Bank were, in their words, not compatible with humanitarian principles and international law. And those words carry the weight of the law, of course, because they transform Israel from a supposedly safe investment into a reputational liability. And the move did not come out of nowhere. It followed just weeks after Norway's government pension fund Global, better known as the Oil Fund, and at $1.7 trillion, the largest sovereign wealth fund on the planet, announced it was selling stakes in 11 Israeli companies, excluding 6 others, and severing contracts with Israeli asset managers, all on the grounds of Israel's humanitarian violations. When the largest fund in the world calls you a human rights risk, and when a mainstream Danish pension fund validates that judgment by following suit, the story ceases to be about money in or out. It becomes one of legitimacy, about the crumbling of this myth of immunity that Israel has built up for decades. So to grasp the scale of this shift, it's worth pausing on what Norway actually did first, because the oil fund is famous for its conservatism. It invests Norway's petroleum wealth, its oil wealth, for future generations, guided not only by parliamentary consensus, but strict ethical rules as well, their Council of Ethics. It has excluded companies before, those tied to coal, tobacco, corruption, or brutal regimes. But rarely does it target a Western-aligned state. Yet last month, it made an exception. It dropped Caterpillar from its portfolio, explicitly citing the role of its bulldozers in demolishing Palestinian homes. It sold stakes in 11 Israeli companies, including state-linked banks and infrastructure firms. It announced the exclusion of 6 more Israeli companies on the grounds of their entanglement in West Bank settlements and Gaza operations. And it terminated contracts with Israeli asset managers, signalling that even indirect financial exposure was too risky. This was not the language of radical politics. It was a dry, legalistic assessment of a fund that calls genocide a fiduciary risk. The consequences were nonetheless immediate. Washington declared itself very troubled by the decision to blacklist Caterpillar, underlining how politically sensitive even corporate exclusions become when Israel is involved. Israeli banks and firms saw their valuations wobble, not because the Norwegian fund stakes were irreplaceable, because when a behemoth like this pulls out, others take notice too. The reputational contagion spreads faster than the capital outflow. Markets, after all, are all about perception, aren't they? It's all about optics and risk. And once perception shifts from Israel is safe to Israel is tainted, the damage just multiplies. So then comes Denmark. Academic pension's decision was smaller in numerical scale, but larger in symbolic weight. This was not a targeted exclusion of bulldozer manufacturers or tourist booking platforms. This was a wholesale declaration that Israeli state assets, the bonds that finance its government, the companies it owns or controls, are uninvestable now. The fund linked its decision not only to the occupation of the West Bank, as many had done before, but explicitly to the ongoing war in Gaza. The Gaza war is not a temporary crisis, they implied. It is a structural violation that renders Israel incompatible with responsible investment. The message, therefore, was a blunt one. The state itself is the problem. Israeli media tried to spin the story, with some outlets claiming the fund was withdrawing over $20 billion in Israeli assets. That number was inflated. It implied that nearly the entire portfolio was invested in Israel, which is not the case, but in a way that the exaggeration betrayed their anxiety, didn't it? If it was really trivial, no one would need to inflate the sums. The truth is more damaging, therefore. The actual financial impact may well be very modest. We don't actually know the real figure here. But the symbolic effect is enormous on its own without that knowledge. For Israel, the stigma is more dangerous than the cash loss. Denmark's move also needs to be set against the backdrop of a Scandinavian pattern unfolding. Norway's KLP, that country's largest municipal pension fund, excluded Caterpillar last year, but again because of its role in demolitions. Before that, KLP had divested from 16 companies tied to settlements. Danish Pedagoggernes pension dropped Booking.com, Expedia and Airbnb for promoting settler tourism. These were smaller steps, but they built a moral trajectory. Scandinavia has done this before. In the 1980s, Norwegian and Swedish funds were amongst the first to divest from apartheid South Africa. They were early to blacklist tobacco, coal and weapons. They led on climate divestment. Scandinavia is the region where ethical investing is not an afterthought, but the governing principle behind all of it. There's no surprise it's begun there, really. This is why Scandinavia, if that's the question that's come to your mind. And partly that is structural. These funds are member-owned. They're not detached institutions. Teachers, professors, municipal employees, they all have direct influence in these funds. They do not want their retirement money tainted by complicity in war crimes, and they can do something about that. Partly it's political culture as well. Scandinavia has very strong civil societies where grassroots campaigns, unions and NGOs can push fund boards without being drowned out by accusations of anti-Semitism, for example. In Germany or Britain, a pension fund divesting from Israel would trigger a storm of political and media backlash. But in Oslo or Copenhagen, it's consistent with established practice. And partly it is precedent. Once you have divested from the likes of Myanmar or Sudan or from fossil fuels, it becomes easier to divest from Israel. You already have the template. You identify the violation. You apply the ethical guidelines. You exclude the company or the state. And the question then becomes, what damage does this do to Israel? Not in immediate dollar terms, perhaps, but in long-term structural terms. The first layer of damage is going to be reputational. Israel has built its global brand on being that startup nation, a hub of innovation. Every divestment reframes that brand as occupation and settlements in Gaza. Investors start to ask not what return will I get, but what reputational risk am I taking? The second layer is precedent. Norway's oil fund already did it. Denmark has followed. Each move lowers the threshold for the next fund. So if you're a Dutch or a British pension board, you now have to explain all the more why you are more tolerant of human rights violations than Scandinavia is. The burden of proof flips. Third layer is financial. If state bonds and state-linked companies are labelled toxic, Israel will face higher borrowing costs. Investors will demand a risk premium. In a wartime economy already straining under military expenditure, that's no small thing. And the fourth layer is strategic. Israel's foreign policy has been to wall off politics from economics. You may disagree with us, but you will still trade with us, won't you? Has always been the narrative. Divestments puncture that wall, though. They show that Gaza cannot be quarantined from investment decisions. It needs to be factored in now. And the fifth layer is psychological. Each exclusion emboldens more activists. Academic pension did not invoke the word BDS, but its actions were indistinguishable from a boycott. For Israel, which has waged diplomatic war against the BDS movement, this is a nightmare. And here is where Israel's reaction becomes telling. Officially, it just shrugs. Ministers call these exclusions symbolic, irrelevant, the work of hostile activists masquerading as fiduciaries. But every shrug looks less like confidence and more like a flinch. Because if it truly were irrelevant, why bother to sneer at all? Why did the government not ignore academic pension completely? Why did Washington feel compelled to denounce Norway's exclusion of Caterpillar as very troubling? Because Israel knows the truth. The symbols become precedents. Precedents become cascades, and cascades become crises. So behind their mask of indifference is the unmistakable sound of a state that is getting very, very rattled. And there will be a domino effect. The Netherlands is the obvious next front. Again, another Northern European nation. ABP and PFZW, two of Europe's biggest pension funds, have long faced campaigns over their Israeli holding. They argued that engagement was better than divestment, but now activists can point to Norway and Denmark and say, why are you lagging behind? In Sweden and Finland, church and union funds will be pressed to follow their neighbours. In Britain, local government and teachers' pensions are ripe targets. Even in Germany, where political taboos run deepest, the reputational pressure is mounting. The burden of proof has shifted. The question is no longer why divest, but why haven't you? And this is the South Africa parallel. In the 1980s, apartheid Pretoria shrugged off the first exclusions. It called them symbolic too. It insisted its economy was resilient, and for a while it was. But as more funds divested, the stigma grew. By the late 1980s, South Africa could barely roll over its loans. Its borrowing costs soared. Banks refused to lend. The financial squeeze became unbearable. What began as symbolic ended as existential. Israel is not there yet, but the trajectory they're on is very familiar. But the deeper questions that flow from this are uncomfortable for Israel's defenders, difficult for them to answer. Do markets now enforce international law when governments fail? Pension funds are not courts, but by excluding Israel, they are declaring its actions unlawful in practice. What does fiduciary duty mean in this context? If being complicit in genocide exposes members to reputational and legal risk, then divestment becomes not a political choice, but a financial responsibility. What contradictions does this expose in Europe, where Scandinavian funds divest while Brussels maintains trade agreements? How long can elites insist on business as usual while grassroots institutions pull the plug? And what of Israel's tech sector? If state assets are stigmatized today, tomorrow it could be venture capital and startups. That would cut into Israel's economic crown jewel, wouldn't it? There are also legal collisions on the horizon. In the US, anti-BDS laws penalise institutions that boycott Israel. What happens when mainstream funds divest on human rights grounds? Do states sue their own pension boards for fulfilling fiduciary duty? So the contradictions are explosive, and the problems for those defending Israel will mount up. And therefore the conclusion is inescapable. Israel's financial immunity is broken. Norway cracked the wall. Denmark just widened the breach. Each new divestment will deepen the fissure. This is not about modest sums trickling away. This is about the slow collapse of the illusion. Every exclusion shatters that myth that Israel is a safe financial haven. Every withdrawal of capital bleeds credibility from the state. This is how it ends. One divestment at a time. The financial edifice is stripped bare until Israel stands where South Africa once stood, a pariah with no shield left. The only question is not whether this trajectory exists, but how long Israel can pretend its shrugs are not really flinches as the wall around its financial immunity falls apart around them. For more on Norway's divestment from last month, showing the speed with which divestment is beginning to spread in Scandinavia and the scale of it as well, check out this video recommendation here as your suggested next watch. Please do also hit like, share and subscribe if you haven't done so already, so we can ensure you don't miss out on all new daily content, as well as spreading the word and helping support the channel at the same time, which is very much appreciated, holding power to account for ordinary working class people, and I'll hopefully catch you on the next vid. Cheers, folks.